Hello, good afternoon, everyone. Welcome to this panel session on inclusive investing and financing, empowering all for a sustainable future. I'm Mukesh Wabadi, and I'm truly honored to be your moderator for today's discussion. Now, creating an inclusive financial landscape is fundamentally about the people, right? And this involves concerted efforts to strengthen the social safety net, support vulnerable households, and promote gender equality, while also extending support to marginalized communities. Now, by weaving together these elements, we need financial ecosystem that does not only foster economic growth, but also prioritizes the well-being and equitable participation of every individuals. Now, while Malaysia has made notable progress in enhancing accessibility to financial products and services, there is still room to expand the outreach and accessibility, especially for the unserved and underserved segments of the population. And in today's complex financial landscape, the call for inclusive and sustainable finance has never been more urgent. Now, before we dive in, ladies and gentlemen, let's take a moment to introduce our esteemed panelists who are with us today, who will bring a wealth of experience and expertise in today's conversation. Now, our first panelist on my right is YB Dato Indra Muhammad Shah bin Abdullah, currently the Member of Parliament of Paya Besar, and he currently holds the position of the esteemed position of Chairperson for the Special Select Committee for Finance and Economy. Next, we have joining us with us today, Mr. J. Khairil Jeremy Abdullah, the CEO and Executive Director of Bank Simpanan Nasional. With over 20 years of leadership experience in the financial sector, Mr. J has a deep-rooted understanding of Malaysia's banking landscape, focusing on community banking and financial inclusion. We also have Dr. Aaron Sam, the Group Chief Strategy, Marketing and Business Development Officer of Alliance Bank Malaysia Berhad. With over 23 years of combined management consulting, research and industry experience, Dr. Aaron is a key player in business strategy, operating model design, customer experience, process optimization and digital transformation. And we also have, last but certainly not least, we have Puan Haja Norita binti Muhammad Sidek, the Chief Executive Officer of MBI Selangor. With over 30 years of experience in the public service, Puan Haja Norita has honed expertise in corporate planning, strategic planning, business strategy, and corporate development. Now, thank you all so much for spending your time with us today. Now that we know the backgrounds of our panelists, let's jump right into the discussion. Now, before I forget, feel free to ask if you have any questions, any burning questions. You have the link on Slido, so you can just key in your codes, and we will be taking your questions towards the end of the session. Now, to kick things off and to really warm up this panel, right? Let's address the fundamental question. What does inclusive and sustainable finance mean to you? And why is it important for us to collectively explore the principles of inclusive financing and investing in today's landscape? And I'd love to hear perspectives from each of you, please.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera and a very good morning. Thank you for having me today in this important program and significant discussions with all the stakeholders. I was the Deputy Finance Minister. Since then, I believe the principle of inclusivity emphasizes the importance of including and accommodating diverse groups or individuals, ensuring that everyone feels valued and respected. For me, it's also promote equal opportunity of all backgrounds, their abilities, maybe sometimes based on their identities as well. To me, crucial these discussions to look at three parts. Once the crisis we faced before, Since ASEAN financial crisis, we can see financial sector had driven the financial system into structural reform, and this is how our local bank, domestic bank, shape Malaysian economy. I believe that after we see the recent crisis COVID-19 impacted our Malaysian livelihood due to degraded health conditions and also our economic downturn for 2 years, about 160,000 people lost their job because of this COVID-19 outbreak, and also impacted to company, especially for the small, medium, the micro, small, medium enterprise, around 16,000. So this is very important for us to look at how the inclusivity run on. This is my point to get the starts. Thank you.
Good morning, everyone. Firstly, I would like to thank our friends at UNGC MYB for having us, Alliance Bank, as your partner for this symposium. Now, back to the question in terms of inclusive financing. We believe we need to view that almost in two parts, right? So firstly, in the context of the sustainability goals that we have as a nation, but also in the spirit of, I think what Farouz mentioned earlier on as well, leaving no one behind, right? And if you take the SME segment as an example, the focus of inclusive financing shouldn't just be about improving access or making it more convenient for businesses to get loans from banks, right? I think that's par for the course. But it should also include how we are assisting these small business owners to transition to more sustainable business models and practices. And I think you and I know that for a small business player, relative to their counterparts in larger corporates and the GLCs, that's not an easy task because they lack the know-how, the expertise, and the resources to be able to do that effectively. So I like to think that inclusive financing now needs to also encompass how we are facilitating a just transition for these small business owners across the country. And just like to add that I think as financial institutions, we play a big role here because we are well positioned in terms of relationships with many of these small business players on not just providing the funding aspects of it, but we believe we can play the role of also providing the advisory as well as the necessary tools for them to embark on that journey. Obviously not necessarily doing it alone, but through partnerships such as what we have with UNGC and other like-minded strategic partners that we work with.
Firstly, thank you, Mogesh. Thank you, the organizing committee, for inviting me. Thank goodness Aaron spoke about SME, because I'm going to deep dive into the retail segment. And just before we move on in terms of understanding the context of financial inclusion, I think we all should start by also having that baseline of who are the underserved and who are the unserved. A 20-year-old graduate who probably comes from a well-to-do family, who are not served yet, is unserved. Similarly, those who are geographically constrained by infrastructure in a very remote area is also unserved. So if we deep dive and have that baseline of the segments that are unserved and underserved, we could then understand better how do we move forward as an ecosystem. So it's a very important aspect because I would like to just give an example of BSN. BSN is entrusted to distribute the government financial aid, or the Sumbangan Tunai Rahmah. And when we first started, this was many years ago, when we first started on this journey, the data on people or recipients without banking accounts. The number is actually staggering. YB Saha here understands fully because we worked very closely at that time. It was more than 1 million. So more than 1 million recipients do not have a banking account. As opposed to the total recipients of say about 8 to 9 million, normally that's the range, right? So it's over 10% of the recipients do not have a banking account. So where do we start? That's the baseline, right? Now, fast forward a couple of years from there, we realize one very important aspect. Education intervention is key. And if we do not have the right education intervention, how do we translate this more than 1 million recipients of the Sumbangan Tunai Rahmah who do not have a banking account to have a banking account? Let's start from the very elementary level and then move up the scale. So that's where we realized, and we had a lot of education intervention. We had a lot of awareness around recipients who do not have a banking account. So we are glad that the stats have improved. Today, it's only about 400,000 left, still close to about 5% of the total recipients who do not have a banking account. So this is the baseline from a retail savings perspective. And if we move on to the probably micro business or on the financing front, so a bit of marketing, we are the market leader today on the microfinance segment with 48% market share, but nevertheless, it has come a long way for financial institutions in particular to understand. It is not easy to lend to the micro business. We all know why. The default rate is high. So traditionally, we all, as bankers, we all like to use, our application score, our behavioral score, our scorecards, and things like that, methodologies like that. But with micro, we understand that the need of the micros are different. First thing first, we need to be able to do the P score, something that is not probably heard of so frequently. The P score is called the passion score. Because once we are able to identify micro customers or businesses that have the right passion to be the business, the rest will come secondary. So these are things, and a lot of intervention required in terms of education, financial literacy, and also education, even to the micro businesses. So these are some of the areas that we have realized where intervention is required. Education and literacy is required for the unserved and the underserved. Thank you.
Thank you, Moges. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and salam sejahtera, everybody, ladies and gentlemen. First and foremost, thank you, UNGC, for inviting us to participate in this August occasion. And I would like to do a little bit of promo on what is MBI Selangor. MBI Selangor is actually a state agency. We actually manage the asset and investment on behalf of the state of Selangor. Okay. On the question that have been posed to me is why the financial inclusion is very crucial. For us in Selangor, it is crucial, especially for the marginalized and the underserved community. What is the underserved community to us? Namely are the unbanked, the gig economy workers, street food hawkers, pasar malam, pasar tani, yeah, and all these group which they do not have good credit scores, and awfully they are primarily left behind because they lack of credit worthiness. And we can't leave this group behind, primarily because there's no point of talking of ESG and SDG to them if there's no food on the table, right? So first and foremost, we need to cater for their needs, and we need to empower them to flourish economically, and also to help them get out of their vicious circle of urban poverty. In definition, kalau asnaf, kalau lembaga zakat punya definition, to get them out from asnaf and also to get them out of being B40. Thank you.
Thank you. Thank you so much. I think there's two common phrases that we've heard throughout this very first section here, which is equality and just transition. And I really like Mr. J's definition, very brilliantly defined on what is unserved and underserved, and that education intervention is key, right? I think, thank you all for your starting thoughts, and I think it's a great start. I see that we're all standing on the same ground. I sense a collective understanding of the transformation power that lies within the principles of inclusivity, and that we all are sharing the same goal to shape an inclusive financial future. Now moving on, YB Shah, as the chairman of the Special Select Committee on Finance and Economy, which plays a crucial role in examining government policies related to finance and the economy, could you share some insights into how context-based financing and inclusive investing can be integrated into Malaysia's economic policies to ensure that all stakeholder groups benefit from these financial decisions?
Thank you, Moges. Before I answer your questions or give my opinions for the second question, let me add some more points for the first questions. Ladies and gentlemen, we listen from other panels regarding the SMEs. Bear in mind, for me, I strongly believe, based on this financial inclusion, we can reduce the poverty and lift up shared prosperity. But the most important thing, the transitions from, for example, what Mr. J said just now, how to do the transitions from informal sectors to formal sectors. Most of our micro SMEs comprise, based on total employment in 2021, comprised of 22.7% out of total employment in 2021. Just imagine, if we can, I'm looking at the economic perspective, if we can transform them from informal sector to formal sector, we can increase the account growth in financial services, which means we also can increase our economic growth because of our liquidity. We can have a bigger liquidity amounts in our banking system. Then it also can contribute to our economic growth. And the most important thing to answer your questions, we must understand our new economic policy based on two important, from my perspective, National Economic Transformation Roadmap, what in the first session a bit elaboration by YB Wong Chang, and also NIMP. Because based on NIMP 2030, this industrial policy expected to grow about 20% employment, and also we can assist equal balance. Right now we facing we can see a gap between East Coast and West Coast in terms of economic growth. That's why under NIMP already embedded the inclusivity, whereby in NIMP we try to improving the inclusivity based on we targeted each states based on their state GDP, FDI and DDI, everything this administrator under MIDA. NIMP also cited the increase the investment inclusivity by supporting less developed states because the major contributions to our economy is manufacturing. That's why the value added for this manufacturing going up, inshallah, by 2030 by 30%. We're talking the inclusivity regarding the Bumi Putra perspective, and in NIMP also we have tindakan pembangunan Bumi Putra 2030 towards the Bumi Putra companies. For NATR also we try to reduce the carbon emissions by do the transform from the traditional fossil to the new green energy or clean energy. But bear in mind how to do the contact base and integrate to these two policies is very important. From my perspective, 3E. One, you must explain. We must need the government agency to no more outreach. We must do the reach out to all the level demographic. We must let them understand this policy first. Not only at the federal level, this program also we need to organize at the state level, district level. We must need them to understand well about what sort of initiative and program under these two important policy and roadmap for our economic growth. Second, my opinion is exposure risk. This is very important, especially for the financial services industry. I do agree with Jay just now when he talking about the credit credibility for the loaner. But we also need to understand with the digitalization environment right now, we also exposed to data manipulations. So you in the financial institution must have the capability and expert, so-called data expert and IT expert, to make sure the security of data you can give the customer trust based on the new trend of digitalizations. Last but not least, we need to have a regular engagement. Ladies and gentlemen, our problem right now, we always do engagement sessions by seasons. If any dispute issue or related issue came out, then we sit down and discuss. I think this is not the proper way. We need to move forward to very targeted engagement, and we need to have this medium and channel to lift up any related issues regarding the economy. We can mitigate together. But the most important thing to me, more guests, instead of you doing the mitigations, you must also need to urge people to adapt with the current situation. Thank you.
Definitely. Thank you so much, YB Shaha. I think one to note from your intervention was two key things also, engagement and making rakyat understand the policy. Right. Thank you so much. Dr. Aaron, turning to you, as the Group Chief Strategy Officer of Alliance Bank Malaysia Berhad, could you also share the current initiatives that your bank has in place to promote financial inclusivity and the impact that they've had on underserved communities or SMEs in Malaysia?
Thanks, Mungesh. Just wanted to continue from what Jay was sharing. Obviously, I think as an industry, we have made significant progress when it comes to access to financing for SMEs in general. If you look at the statistics by Bank Negara, the loans outstanding to SMEs in the country now stand in the tune of 360 billion ringgit, right? And that represents about 50% of total business loans that banks provide. So to give some perspective, about 10 years back, that number was closer to about 40%. So we have made progress. Having said that, when you look at the sub-segments within SME, obviously it's a very broad segment, right? The challenge still lies in the smaller SME space, as well as the micro enterprises, as Jay had highlighted earlier. So what happened was 2 years ago, if you recall, at the height of the COVID pandemic, at Alliance Bank, we actually launched a fully digital SME loan proposition. So basically, a small business owner can just upload their bank statements fully digitally online, right? And within 24 hours, we will revert to him or her with a loan decision, right? And they don't even have to come to the branch to meet us for that whole process. Now, to do that, right, we had to radically change our approach to the SME segment. And that means, number one, keeping the digital process very straightforward and very simple. Number two, changing our underwriting approach. I think I like what Jay mentioned, the P score, right? The passion score. What we are looking at is less of the traditional financial statements, but more in terms of the dynamic cash flow analysis and the transaction behaviors of those customers. And in fact, we are now rolling out psychometric assessments as well, right, as part of the application process to basically gauge the willingness to repay of these applicants, right? So we're testing out different approaches as well, as similar to what Jay had elaborated earlier. And so, I mean, the point I'm trying to make here is technology is key, right, when it comes to driving inclusion, but that is not the silver bullet. What's equally important, and I'm going to also echo what Jay said earlier, is the financial education aspect of it. So what we believe is teaching these applicants how to have a healthy relationship with their banks. So when, for example, an applicant who may not qualify for a larger loan right away, what we do is we don't just turn them down. We give them a micro line to start off with, right? So they can start building their credit history. We teach them good financial management habits. And then we monitor and track their repayment behaviors. And we will then increase their lines in tandem with the behaviors that they portray. So the goal here is to give these SMEs a chance to build a positive track record in their credit history.
Right. Thank you so much, Dr. Aaron. I think you mentioned very clearly about how Alliance Bank have been simplifying the process for your clients, and the importance of data, even to really understand the behavior and educating them, not just turning them down. Right. Thank you, Dr. Aaron. Now we're turning to Mr. J again. Now, Bank Simpanan Nasional, you're the CEO, and with its vision of no Malaysian left behind, what are some key initiatives that BSN has taken over to ensure unserved and underserved communities have access to affordable and inclusive financial services?
Thank you, Mogesh. So I would like to, at least decipher this whole component into three areas, right? The first one is, which is very key, is of course financial intermediation, serving 100% of the MUKIMs or sub-districts that we have today in the country. We have close to about 900 MUKIMs or sub-districts. Today we are very proud to announce that we have covered 96% of all the MUKIMs in the country. That's through our footprint of our brick and mortar, our banks, our cawangans, or even our agent banks. So that's present. So we have today 389 branches, of which 189 of them, or 46% to be exact, are in rural areas. So these are mostly in Sabah, Sarawak, and East Coast Pahang. One of them happens to be YB Zaha's constituency, which we serve with full heart and passion. Terengganu and Kelantan, of course. And this is our commitment in fulfilling our mandate. Why do we say that? This 46% of our branches we can forget about even a break-even position. So they are not meant to even think about making money, right? So these are branches that are there to serve. The agent banks are there to fulfill a very important mandate, which is one of our core aspiration, which is to make sure 100% of the MUKIMs, we are getting there, 100% of the MUKIMs are served. I've mentioned briefly, we have 2,500 agent banks. We have 10 mobile banking branches. These are not your mobile apps. These are a van that are equipped with ATM machine and a counter that goes from town to town. The van travels to very remote areas. We'll park there for a day, and then we will serve the community before we go to another location. So we have 10 of that now, 5 in Sabah, 4 in Sarawak, 1 in Pahang. They don't drive to Paya Besar, YB, but they are in Jerantut and Gambang. So this is also a very important component, right? And our agent banks, they have very similar transactional capabilities like our bank branches, except they don't do loans and all, they take referral. But they exist in smaller districts to help fulfill this mandate of ours. And we have processed close to more than 11 million transactions. This is just 1 year data. And of course, value-wise, it's almost 1 billion annually. So we have served 96% of the Mukim, and what is also very crucially important is digital adoption. I think Dr. Aaron mentioned about digital adoption. So we have also a very ambitious target of converting 60% of our base from our existing base into our online banking platform. This is also an inclusion agenda. Now, the next key area is fintech collaboration for microfinance. I know Dr. Aaron YB also mentioned, Puan Haja also mentioned a little bit about digitizing some of the aspects of our business. But why collaborating with fintechs is important on our micro space, and how do we even do that? What kind of solution is this? Now, today's business is all about scalability, and we need to be able to scale. Just another example of how we powered one entire Pasar Malam. This is the hawker stalls, Puan Haja, that you mentioned earlier. The entire Pasar Malam to be cashless with a technical solution provider. Now, we could not have been able to do it if we were to do it ourselves. One is there's just too much technology headache and challenges, which, as bankers, I can tell you it's crazy. So we partner with technology providers for them to have that concern and that challenges while we worry about financial intermediation, business, and also the financial aspect of things. So it's very important for us to partner, not only from a technology perspective, but also from data perspective. Now, in micro business and microfinance, data is key. We all know, these are businesses that do not necessarily have all the documents that you want, right? The bank statements, the annual report, the audited accounts, etc., etc. So they don't have all those sometimes. So where else do we go and look for assessment of their behavior? And that's where data collection is important. So when we partner with fintech, we have dashboard, real-time data of how do they behave in terms of their selling activities, their purchase activities, how do they buy their raw materials, how do they convert that into sale, and how do they do their payments to their suppliers. So we have all this downstream data, which is very important for us to be able to assess behavior from that perspective. Again, if I were to link back to passion score, you would be able to have some form of analytics, just looking at all those data and whether they are in the business because they are so passionate about the business or because this is a touch and go situation, let's go get some money, let's pretend to do some business, and then let's buy some assets and there we go, right? So it's important for us to establish that fact, and we could not do it without collaboration. So in the world of business today, I strongly believe in partnering and collaborating so that we can have the scale and move forward with the micro business. So that's a very important agenda as well. Just a bit of success stories. We have graduated close to 2,000 micro businesses into SME, registering turnover of more than 300,000. Of course, by doing so, the number of employments have also increased by close to 9,000. And we do a lot of partnering with people like Visa, to go into areas of financial education, financial planning, digitization. We work with a commercial bank in particular. It's not Alliance Bank, so I won't say it here. Because we have a very clear mandate of nurturing micro business. And where do they go from there? So we need someone to be able to also receive them and onward nurture them to do what they should be doing better. So this is a very important aspect from a financial inclusion perspective. Now, just linking area 1 and area 2 into what, again, I need to emphasize the need and the importance of financial education and literacy. A lot of times, even when we deal with the micro business, when we do our town halls, when we do talk with them in areas like we have done quite a number with YB Saha's constituency, we go and we speak to the micro businesses. We sometimes realize that as much as they want to be successful in their areas of business, they do not have the elementary and the fundamental skill sets. And they are as minute as cash flow management, business planning, and so on and so forth. So this is where we come in and fill the gap. So we work with all these SME development agencies, SME corps and all, to identify the right module so that we can then bridge the gap in a very meaningful way. It's hard to bring 100 micro business into a room and tell them we want you all to study or we want you all to learn. It's very difficult endeavor, let me tell you that. But only by converting them and giving them some kind of incentive at the end of their successful endeavor of completing the modules, we can then see participation in a more rigorous manner. So it is education intervention again. It is a lot of literacy awareness and campaigns that we have to do. We need to have that stamina to do that, and that's how we will then be able to complete the ecosystem. Otherwise, we will not be able to leave anyone out of the ecosystem. So that's the 3 key areas.
Thank you so much, Mr. J. Brilliant points. Now, moving on to Puan Haja. You're the CEO of MBI Selangor, and your organization plays a crucial role in managing assets, like you mentioned earlier, and investments for the state government. And could you share also on some of your strategic initiatives, and also briefly touch on the impacts that these initiatives and strategies that has brought upon the unserved and underserved community, especially in the context of the Selangor people?
Okay, thank you, Moges. The strategic program that undertaken by MBI and the Selangor State is actually in line with the spirit and slogan of Kita Selangor Penyayang, with the objective of to raise standard of living, promote economic growth, and also to reduce poverty. So please bear with me for me to share few of the programs and initiatives done by the Selangor government and MBI. One of it is microcredit by Yayasan Hijrah, done undertaken by a subsidiary of us. It's actually modeled from the microcredit by Grameen Bank Bangladesh. It is this concept is a long time ago, but still relevant to the Selangor State government. It is introduced in March 2015, and how this program differentiate from the commercial, the normal commercial financing scheme. It is an easy loan scheme. Anybody from 18 to 68 years old can apply for this loan. And just now, Yang Bahagia Nurul Izzah mentioned that most of the aging community are women, and I'm proud to say 60% of our borrowers are women, and they are also the best group who pay promptly. Okay, we don't need any guarantor for this kind of loan. Thank you. No collateral, and but we make sure that the business are legal. Yeah, and they are clear from CITOS. And one thing I need to share is they can borrow as small as 1,000 ringgit and up to 50,000 ringgit. And mostly the sectors are F&B, manufacturing, agriculture, and service sector. The question is, why can this be sustainable? It is because it is a saving-based financing, whereby all the repayment done by the borrowers, about 12% will be put into a fund so that it will be rolled over, and payment are done weekly. Every week we will go and see them and pay. And also about 40% of the loan is actually the fund, 40% of the fund are from bank loan. And we would like to increase this to more so that we can make sure that more fund is readily available. So the project owner, when it is loan instead of grant, so the project owner must make sure that repayment is done promptly so that we can serve the bank loan that we took. Yeah, okay, that is first. The second one is actually Selangor Advance. Selangor Advance is actually, through our observation, many small contractors in Selangor face payment problem, although work is completed. Okay, through this scheme, contractors are able to obtain prompt or advance payment for invoices with work completed, thereby improving their cash flow to ensure the sustainability and livelihood of their business. How this program is actually offered via a digital platform, so it speed up the response time, and also it is non-mandatory, and it is a non-mandatory program where it offers a competitive rate for supply chain financing. So how do we make it sustainable? It is because when we model it from the factoring scheme, we work together with Kenanga. So there is enough fund to go round to all these contractors. Okay, the third program is Selangor Accelerator Program. This is actually a program for startup. What we do is we run a competition for startup to present their business ideas. Those business ideas, especially with ESG team, will have a special placement, and winners will be nurtured and facilitate access to capital. So through this program, actually we have actually nurtured 150 startup, and from there 34% are able to secure funding through this program. The last and not least is what we call as Platform Selangor. This is especially for the street hawkers and the pasar malam. We created this program in short plats. It is actually a digital directory platform that bring together Selangor street hawkers under one virtual roof. You can just imagine the makcik-makcik yang jual karipap semua tu kan. So the platform help street hawkers to improve their digital and financing literacy to move their business online. Because sometimes the street hawkers, the product that they sell is actually, the market are quite limited. It is limited to the customer going through the street. But through this digital platform, we can actually improve their market. Okay, they can sell their product online. And how do we help them? We help them to be on board the digital platform, and we also help them to create the content. Sometimes, you know, when we ask this pakcik-makcik, their content is not very attractive. So what we do, we help them to make it more viable, more vibrant. And when anybody see that the food looks so nice, and so you start clicking on it. So from there, Platform Selangor, we have actually put on board about 30,000 micro merchant listed on the directory, and I hope with what BSN is saying just now with the cashless program, I think we can improve and make this program better and bigger. Okay, thank you.
Right, thank you, Puan Haja. This is, I'm already getting time cards, but I really want to touch a little bit on environmental sustainability as well, because I think we've been talking more about inclusive financing, but it's also important that we also try to address, considering that the growing importance of sustainable investments, how can financial institutions strike a balance between profitability and sustainability, and what are the indicators of a successful integration of environmental and social consideration into investment decisions? Maybe I can pass this question to Dr. Aaron, since you mentioned about SMEs earlier.
Yeah, so I'll just dive into a very simple mechanism that we're using, right? everyone, the panelists on the previous panel mentioned about the supply chain program that we're working with Sarawak Energy on, together with our partners UNGC and MYB. We're basically going to assist these SME suppliers of Sarawak Energy to transition to better ESG practices, right? But obviously in that process, they would require some form of funding, financing and all that. So, but how do we then incentivize them, right, to take the right actions and take the right steps? So we first help them understand their current situation. So there's a simple diagnostic tool that we use through our partners, UNGC, to basically help them diagnose where their issues are, where there are gaps, and where the opportunities that they can focus on to move towards more sustainable practices. Thereafter, we come in with the financing aspects of it. But this is not just the cookie cutter loan that we typically give to these SMEs, right? But we basically link the financing rates to their ESG maturity profile. So when they start off, maybe they are at a beginner stage, right? Or maybe just just starting out, so their profile may not look that great, right? But as they take actionable steps towards decarbonization and improve on their profile, based on that, our pricing is also then reduced correspondingly, right? So there's actual tangible incentives, right, that's linked to our loans now, right, for them to take the right actions. So I just wanted to just point out that, yes, it's balancing profitability as well. Obviously, that's an expense that the bank would absorb, right? But we believe that it would then make these businesses also more resilient, more viable, and they will in turn be better paymasters in the future as well, right? So it's looking at the longer term and the sustainable aspects of those borrowers as well.
Right. Thank you, Dr. Aaron. What is your thought on this, Mr. J? As to focusing on the balancing of profitability and sustainability, how is BSN perhaps incentivizing the businesses as to the efforts that these SMEs are taking, and how is BSN helping to fill in this gap?
Yeah, so as is mortgage, I always tell my colleagues in a bank that we have two different balance sheets, right? One is truly on financial sustainability, one is on all our social mandates. So if you mix that both up, sometimes one don't make sense to another. Now, but we have to have this social, what we call it. I mean, it's coming more and more to us that we cannot just think profits. Yes, it's important, but we also have to think about giving back. Now, that giving back portion is where, how do we do it in a systematically manner so that it is also sustainable for both parties. So it's a win-win solution. Now, to answer your question, we don't provide for SMEs. Ours are mainly micros. And micros, as we know today, the challenge is still about the data. I mean, we're talking about scope 3 on our side. It's data collection, and how do we, micros today deals with lives and livelihoods, right? So it's very apparent to some of these micro businesses that before you even tell me to be transiting to, to the green economy, to the, to take care of GHG, etc., I need to first be able to sustain in my business, right? So I think the facilitation has to be there. It's through awareness again. We do a lot of intervention through trainings. We do a lot of intervention through making them aware of why it is important for us to transit. What is net zero? What are all these big jargons that we have been hearing in all forums that we attend today? Not one forum that I've attended over the last 2 years have not spoken about climate change and ESG. So we first have to bring them into that awareness state. That's very important for the micro businesses. And then we tell them, look, let's try and do one thing first. Let's try and assess your baseline in terms of your mobility. What sort of consumption, what sort of emission do you do from your own mobility? Let's try and do that first. So we are starting to have all these modules with our micro businesses. taking them, you cannot do a quantum leap with them. You have to take them through the very fundamental steps all the way up. So that's the level of intervention that we have done. Yeah.
Right. Thank you so much, Mr. J. Now we've come to the end of this session, but before we wrap it up, let's open the floor for questions. I think there's a couple of questions in. Okay. So there's one question on, so banks are good at financing strong and profitable companies. How would new or weaker companies be included in this sustainability journey? Any takers? Yeah, Taryn, yes, please.
It's a tough question, but I'll try to answer it from the angle of how we're assisting our clients, right? So I think when it comes to sustainability journey, everyone starts somewhere, right? So where your starting point doesn't really matter in that sense to us, right? Because we have clients across the whole spectrum, right? In terms of their ESG profile. But what's more important is putting a plan in place, an actionable plan in place with measurable milestones and targets and committing to those plans. And as our group CEO was saying earlier during his speech, we don't just tell our customers what to do, right? But we actually help them to implement those action plans, develop those action plans, and actually implement it. So we have a very structured approach whereby we take them through, as I said earlier, a diagnostics process, help them prioritize the areas that would have the biggest ROI in terms of the implementation, right? And then provide the incentives for them to then, act on those plans, right? And we pretty much handhold them throughout that whole journey, right? So we all, in addition to that, as they implement, they'll be looking for solutions providers themselves, right, to help them with some of their initiatives. At Alliance, what we have done is we have empaneled green solutions providers. So we've done the due diligence on these vendors and solutions providers so that our customers can take comfort that when they procure services from these green tech providers, they can take the comfort that the bank has already vetted these vendors before engaging them. So I think what we try to do is, so there's always a starting point, right, when it comes to the sustainability journey. And for our philosophy is that we want to help our clients improve on their profile, no matter where their starting point is.
Right. Thank you, Dr.
Can I
yes,
take this question?
please.
In MBI Selangor, we set up what we call a venture capital. Okay. What we do is currently we have about 200 million fund for it, this venture capital, we look around for new and potential businesses who can be developed and who can grow. Currently, we have one company named iMotorbike. It's actually buying and selling used motorbikes. And we have been investing about 400,000 USD into these companies. And they are growing very well. And also, we help them to connect with our ecosystem whereby they need skilled mechanics, and we have that inside our ecosystem. So this is how we develop them. So I think I welcome banks who could fund together with me, and we make this fund bigger.
Right. Thank you, Puan Haja. Maybe Wabi Shaha, a brief remark on this. Maybe focusing on regulatory framework, how can you adapt?
The most important thing for me is that education interventions. If you have a good framework but no education's interventions at the community level. For instance, in my constituency, I like to promote a bit my initiative at the ground level. Yes, I do agree with you guys, ladies and gentlemen. Some jargon words in economic term, people at the ground level doesn't understand. They're very hard to understand the fiscal, the monetary. Then come again after SDG, ESG. After ESG, maybe some new words from the US introduced in Malaysia. But I do believe when we did a program, call it Paya Besar ESG Talk you can find on your Instagram if you have Instagram. The most important thing, we create a platform, Moges, to do the education intervention at the secondary level, because they are the future leaders. They are the future customer of your financial services industries. But if we can educate them well, they understand the new wealth of their future. I believe any framework we did, not only just framework, you must execute. Thank you.
Very well said, YB. Now, thank you so much. In the best interest of time, we're going to have to, unfortunately, we're only taking one question from the floor. Now, we've come to the end of the session. A huge thank you to all panelists for sharing your insights and perspectives into this very, very important topic. Now, as we wrap up today, let's not forget that the real work begins now. Take these ideas beyond this room, and remember, this is not just another gathering, but the day we decided to do things differently. So I'd like to close this session with a short quote. Inclusive finance isn't just about redistributing wealth, but it's about redefining worth and ensuring every wallet carries the currency of opportunity. With that, thank you very much, and have a great day ahead. Thank you.